In 1971, Intel introduced the world's first microprocessor, the Intel 4004. It was smaller than a fingernail and slower than the cheapest kid's toy calculator that you can buy today. But it sparked a revolution. Just 15 years later, microprocessors powered the personal computers that landed on most every office desk and living room tables around the world. They automated spreadsheets, balanced company books, and they made the word processor a game changer for how we worked and communicated. In short, they turned 15 years of innovation into an explosion of productivity and prosperity. But here's the kicker. We're on the brink of another technological revolution, a leap so profound that it doesn't just enhance our current tools, but it redefines the very limits of computation. Enter quantum computing. Conceived in the early 80s, this technology has evolved from theoretical physics to tangible working prototypes. Artificial intelligence has been the hottest topic for the past 2 years, and honestly, quantum computing will make AI look insignificant. Because quantum computing could completely rewrite and redesign every form of technology that we have today. In fact, 2 weeks ago, Google announced their latest quantum processor named Willow. They estimate this processor will allow us to solve insanely complex problems in under 5 minutes, a task that would take today's fastest supercomputers an estimated 10 septillion years. I don't even know how to comprehend what 10 septillion years means. So obviously I asked ChatGPT, and the response was that if every grain of sand on Earth represented 1 year, 10 septillion years would still be 10 trillion planets covered in sand. That's why I'm covering the top 9 quantum computing stock to supercharge your portfolio. And by super, I mean super. Or I simply mean that my goal is that half of these stock will double in the next few years. Now, I'm not going to get into the specifics of how quantum computers work, because there are a lot of better resources to explain it, and I don't want to look like a bigger idiot than I already am.
What an idiot!
But I will state that one of the biggest holdups with quantum computing is the fact that they are plagued with errors, and they have very fragile systems that require redundancies to compensate for those errors. Now, I apologize in advance that this video is a little bit long because there are only a handful of top players within quantum computing, and I wanted to speak to all of them in one video. In my opinion, investing in quantum computing can be approached by focusing in on 3 key areas. First, we have the architects. These companies are at the forefront of developing physical quantum computers and will see the largest initial growth in stock price. Next, we have the integrators. This group focuses on creating the infrastructure that supports quantum computing, including software and hardware solutions that brings the technology to life. I'd expect them to see more growth and momentum once the technology becomes a little bit more mainstream. And the last sector is the facilitators. These are service providers that offer access to quantum computing resources via cloud platforms, enabling broader utilization without everyone having to buy a quantum computer. I expect this to be the last group to see massive growth from this technology, and the one to have the longest run on growth. I just made up this illustration really just to help me make sense of how each company plays a role. And I believe that by targeting investments across these areas, you can gain exposure to the comprehensive growth and development within the quantum computing industry. As you can see, I have a huge list, and I'm not going to be holding you hostage. I'll be talking about each of these companies in the video and how they play a role in each of those growth areas. And some overlap more than just one, which is a good thing. And at the end of the video, I'll share the top ETF for quantum computing for those of you that don't like investing in stock. Now, I hope that you appreciate my style of just laying it all out there at the very beginning, and I hope that I earn a like or a subscribe after I cover all of these details. Let's begin with our architects first, and I'll start with D-Wave Quantum, where they are recognized as one of the pioneers in commercial quantum computing, particularly for their focus on quantum annealing technology. D-Wave became the first company to sell a quantum computer in 2011 and has been expanding its cloud service and commercial partnerships ever since. And of course, I'll speak to that a little bit later on. Where D-Wave happens to be up over 846% year to date and has treated my portfolio quite well. And if you ever want to see my portfolio, I do share it out about once a month in my free newsletter, where you can sign up down in the description. And when we move on to the financials, it proves that this is a speculative stock, where profit margin is extremely negative. And then the debt to assets have been increasing. And down in the lower right, they've been beating their earnings per share estimates in 4 out of the 5 quarters. And when we look at analysts, they have it as a strong buy, but they also have the 12-month forecast at negative 50% downside. And this is something that I often see with startups that haven't produced any substantial proof of performance. There's a lot of people out there banking on what the company could be worth in the future. It only takes a few positive news articles stating a new breakthrough or a new partnership, and the stock suddenly blows up. The fundamentals do not show that the stock is worth its current price, but then again, it rarely does for startups that are hitting on new technology. And as more investors see the potential value, then the company keeps rising. And once the fundamentals begin to make sense, then it follows in the footsteps of companies like Palantir, where it happens to get added to larger indexes. And then more ETFs have to add the company to its fund, and then that drives up the price even further in sort of a snowball effect. But being a realist that I am, I also know that it could be several years for a company like this to improve on its fundamentals. The next company is IonQ, where the company specializes in developing general-purpose trapped ion quantum computers, which utilize ions confined and manipulated with electromagnetic fields to serve as qubits. This technology is known for its high-fidelity quantum gates and scalability potential, and they created the IonQ Forte Enterprise System, which is a rack-mounted enterprise-grade quantum computer designed for data center environments, offering high-performance capabilities for complex computational tasks, where they are up over 240% year-to-date and a wicked high beta of a 4.16. And when we look at the revenue and margin, it's similar to D-Wave, where they are just starting to make revenue, but the margin is extremely negative. And on the right is the debt to assets, which is growing and not ideal, but it is common for startups. But an area that I don't love is the lower right, where they've missed 3 out of 5 quarters on their earnings per share estimates. And analysts have this with a negative 39% downside, despite being a strong buy. Now, I have to say that these last two companies are some of the top companies in the field. And of course, people are going to ask me, is this the right time to buy? And I don't have an answer because the fundamentals don't support the current price. They just don't. But if a ton of people want to get in on the ground floor, then they'll simply choose to buy the stock. And of course, it's going to cause it to skyrocket, regardless of the fundamentals. And that's something I can't get ahead of, even on my best day. But sometimes we just want consistent returns today. And one of the best ways to do that is by owning your own business. That's where today's sponsor, Limits Express, comes into play. They work as business managers to create and manage an Amazon store just for you. And now they offer Walmart store automation to diversify between the two largest retailers to sell product under your own store, where they buy and sell national branded products using your capital and business. They do all the heavy lifting and all of the day-to-day work. They don't get paid unless your Amazon business makes a profit. In full transparency, I have invested with Limits Express to vet them out and to verify their process. Starts off a little bit slow because you need to get approvals to sell the brands, but that's due to Amazon and its processes. So if you're interested in learning more, I'll have a link down in the description so that you can speak directly with Kyle, which happens to be one of the co-founders. You can also check out their website down in the links below. And please keep in mind that all investments carry some level of risk, and this is not a personal recommendation. Now onto Rigetti Computing, which is a company that specializes in developing quantum integrated circuits and superconducting quantum processors. Rigetti also offers cloud-based access to its quantum computers through its platform, Forest, enabling developers to create and test quantum algorithms. This stock has been on an absolute tear this year, where it's up 976% year to date. But when we look at the revenue and the margin, it looks like the prior two companies. They're just starting to make revenue, and they're burning through cash. But I was a little bit surprised to see the debt to assets drop the past 2 years. And in the lower right, they also missed the last 3 out of 5 quarter forecasts. And analysts have this with a negative 67% downside over the next 12 months. And yet they still have it as a strong buy. This Rigetti stock has been frustrating me all year long because I kept telling myself that I was going to be buying on a dip, and it just never seemed to dip all year. And just like all the others, this company is a top leader in quantum computing, but the fundamentals just don't warrant the price. But then again, I've been wrong about buying this stock all year long. At the end of the day, I can show you all of the top stocks within an industry, but your guess is as good as mine how this is going to play out over the next year. I can say that for me, I invested in most all of these stocks quite a while ago with the expectation of not seeing much growth until 5 or 10 years out. I simply saw that as the price for getting in on future technologies a little bit early. Our next company is Quantum Computing with the symbol QUBT, whose core technology includes the Dirac series, which delivers solutions for both binary and integer-based optimization problems. Their products are designed to operate at room temperature with low power requirements, eliminating the need for specialized environmental conditions. Recently, they secured a prime contract from NASA's Goddard Space Flight Center to provide imaging and data processing support, highlighting the company's growing presence in the quantum computing sector, where their performance year to date is an insane 1,772%. But their financials look worse than the others, where the revenue is practically non-existent. But surprisingly, their debt to assets has dropped to next to nothing the past 3 years. And thankfully, they've beaten several of the last quarter estimates. And the forecast was hard to find, but it looks to have about a negative 50% over the next 12 months. Now I'll move on to our only true integrator today, and that would be NVIDIA. As if this company wasn't hot enough from AI GPUs, they've also aligned themselves as a key integrator in the quantum computing ecosystem by developing platforms and tools that bridge quantum and classical computing together. With tools like the qbts platform, which is an open source quantum development platform that orchestrates the hardware and software needed to run large-scale hybrid quantum classical applications. It allows computations on GPUs, CPUs, and quantum processing units within a single quantum program, facilitating seamless integration between classical and quantum resources. And NVIDIA is in bed tight with IonQ and Rigetti Computing, as well as Amazon Web Services. It's amazing how some of these huge companies are all intertwined in so much of the hottest technology that's happening today. As if data center GPU explosion from AI expansion wasn't enough, NVIDIA stands to be one of the top companies bridging quantum computers with traditional binary systems. No surprise that NVIDIA is up over 163% year to date. And I'm not going to dig into the financials because you can see it on almost all of my other videos and it looks great. And analysts give NVIDIA a decent amount of love with an expected upside of 35%. It's no secret that I love NVIDIA and they keep surprising me with everything that they're doing. To me, it's an easy slam dunk for the next 5 to 10 years. The next company is Honeywell, which has been around for over 100 years. But you may not have known that they helped create a private company called Quantinuum, which was the mashing up of Honeywell's Quantum Solutions division and Cambridge Quantum. This is a hybrid company covering all 3 sectors, being an architect with their quantum computers using trapped ion technology and H-series quantum computers. But they also utilize their other expertise to be an integrator, bridging quantum processors with classical computing systems to allow for better user functionality. And they also hit on the third area of being a facilitator with their TCAT, an advanced quantum software development kit. This is one of the few companies that hits on all 3 quantum sectors. And in looking at the performance, it's only up 12% year to date. And I want to point out that the beta is at a 0.76, whereas a reminder, the market is a 1, and anything below that is less volatile. And the PE ratio is fairly low at a 26, which gives a little bit of room to grow. On top of all that, it comes with a decent dividend of 1.92%. And their revenue and margin has been consistent the past few years, but their debt to assets is fairly high. And operating cash flow in the lower left in gray happens to be very consistent. And a positive is that they've been consistently beating earnings per share forecasts. And analysts have this one with over 9% upside for the year. Overall, I think that Honeywell may be a sleeper in the quantum space, where it may be going unnoticed for a year or two, and then get a lot of upside when people start to recognize all that they're doing. However, quantum computers make up so little of Honeywell's entire business that it may not move the needle for quite a while. Nonetheless, this is one to put on your watch list. The next company is IBM, that has been around for over 113 years. And they laid the groundwork for automated data processing in the 1930s, and later helped to blow up the personal computer revolution in the 80s. Now, IBM is a major player as a quantum architect, integrator, and facilitator. They have the impressive quantum processors called Eagle, and soon to have Condor up and running in 2025. They also created a quiz kit, which is an open source quantum programming programming framework to build upon the technology more broadly. In looking at the basics, they're up over 42% year to date. The beta is below a 1 at 0.7, and the PDE ratio is decent at a 32. And I also want to point out that they have a healthy dividend of 2.91%. Financials show a big spike in margin and some revenue improvement, while the debt to assets has been dropping, and with an established company like this, it is no surprise to see the operating cash flow in gray in the lower left as very healthy. And they are also beating their earnings per share expectations. Analysts give IBM only a little love with just over 3% upside for the next year. IBM is not a bright, shiny object like many of the other companies, and I see them as a solid choice in a few years when the demand really begins to kick in for quantum computing, because their overall portfolio is diluted by so many other divisions. Now I'll move on to our first true hybrid architect facilitator, and that would be Alphabet, or as most of us know them, as Google. And I think that Google is what created a lot of buzz recently around quantum computing with their announcement of their Willow quantum chip, where they made a major breakthrough. As I mentioned early on, a major hurdle for quantum computing is the extremely high error rates. Google found a methodology of vastly reducing the error rate, making quantum computing profoundly more useful. Not only are they making the quantum chips, but they'll quickly become a leader among facilitators, allowing other companies access to quantum models via their web services. Their performance year to date is over 37%, and their PDE ratio, it's at a 25, making it very attractive. And the financials, well, I'll splash them up on the screen, but they're extremely good. The only item standing out is the debt to assets, but it's only at 29%, which is still extremely good. Their cash flow, margins, and earnings per share are all fantastic, and analysts only have it with just over 9% upside. I would love to argue with the analyst projections because I see a lot of upside with their AI push with Gemini and now with the quantum computing. However, there's that whole thing out there for them being sued for being a monopoly, which clearly isn't a good thing. Not sure where that's going, but it will hurt their stock no matter what the outcome. And the next company is Amazon, which is already a quantum facilitator, where they offer web services via Bracket, which provides companies and researchers access to a few different quantum hardware setups. Where many of the quantum hardware companies I've already spoken to have working relationships with Amazon to facilitate this access. They are also working to get into the quantum computer hardware with Caltech and also design hybrid quantum computers paired with conventional computer systems. They have a lot of pots in the fire, and seeing as how I used to work at Amazon, I guarantee you that they won't make any announcement until they are ready for mass scaling of the technology. Their performance year to date is over 48%, but their beta and PDE ratio are higher than most of the huge tech companies out there. I won't hit on financials too much because it's a pretty good story all around. Margin on the left is low, but improving with revenue. Their debt to assets is a huge story most people overlook, and their assets exceed $527 billion, which is more than any other company today. Chances are there's an FC within 50 miles of your house, and guess what? That property appreciates. And their cash flow is on fire in the lower left. And if they have a beat in Q4 of 2024, their stock is going to go parabolic. It's a big if, but hey, I'm hopeful. And analysts have Amazon as a strong buy with over 8% upside for the next 12 months. This happens to be one where I think the analysts have it a little bit too light, but hey, we'll see. Just a quick reminder that I have all of these stocks and more listed in a spreadsheet down in the description. And if you're curious which of these stocks I have in my portfolio, well, you can also check that out in my free newsletter, which I happen to share out my portfolio about once a month. As for the top quantum ETF, well, there's really only one player in town, and that's the Defiance Quantum ETF with the symbol QTUM. And here's a list of their holding, where it has a few of the key players that I talked about today. But in my opinion, it's missing out on a lot of the bigger companies that are integrators and facilitators. I wish I could create my own ETF because I would have built this a little bit differently, which I'm sure that you can tell from this video. Once again, thanks so much for watching.